All right, what's up, what's up? Here we are with another trading recap. Today I'm finishing green, $221. Thank God we got something today. USEA just saved the day. And because of today, I was able to finish at my weekly goal. I didn't think I was going to hit my weekly goal. I mean, between Wednesday and Thursday, we had like no momentum. I thought that today would be the same theme or the same thing as the past 2 days, but thank God we got something. USEA, I was able to walk away green $323 on. I felt like I left so much money on the table. I was trading a little bit bigger size at some key areas, but I just didn't have that confidence or that conviction to hold because I'm just so programmed right now to sell my small little 3-4 cent gains at a time that I leave a lot of money on the table, and today could have been a home run day. It could have been a $500-$600 day, maybe more. But I'm still definitely grateful to be green, just to walk away $221 profit at the end of the day and hitting my weekly goal. So that's something to be grateful for, and I do hope that USEA does start to pick some things back up in the market, and especially for next week. In the last half of July. So I traded a bunch of tickers today, 6 different stocks, but the main one was USEA. So let's go through the trades here. I don't want to make this too long. I have a tendency to make these recaps really long. So pretty much my main strategy here on USEA was scalping off the lows, which has been one of the tools that I have developed the past month or so to adapt to this market. And it did keep me profitable the past 2 weeks in July, not having huge winners, but just taking quick gains off a little quick support bounces off of the lows, kind of like sitting on the bid and then hitting and slapping, selling on the ask as it kind of reverts back to like a support bounce or reverts back to the mean. And that's what I was doing. USEA didn't really do much breakout trading, which, if I did hope for some breakouts, I could be extremely green. But I just didn't think that today would be the type of day to use that strategy, but it would have worked out. So let's go through. I traded a lot. See, that strategy that I was talking about, just like the scalping off the lows, it requires to take a lot of trades to just have all these small winners add up into something big, because it's a high win rate. However, the gains are very small. So that's one of the drawdowns. However, if you are trading every day and you need to trade through slow markets and just to try to get green, that's a good strategy because of the high win rate. And even if the market is giving crap opportunity, you can still tend to be green on more often than not in a slow market. But today I didn't pivot kind of my strategy back to what I was doing earlier in the year in March, April, and May, when I was doing really well, trading breakouts and anticipating breakouts. So let's go through this. We had a nice little cup and handle pattern here. However, I wasn't buying and then holding for the anticipation, adding for the breakout. In my previous strategy, I would buy maybe a starter off of this 90 EMA and then adding maybe for this pivot point at 450 and then adding at 463 for that breakout and then taking it off into the pop over the breakout level. But previously, past 2 weeks, the theme has been that those strategies would false break out on you. They wouldn't even break out. They would completely reverse on you and you would be red. So I think if I did use that strategy the past 2 weeks, I would be more red, extremely red. And just breakout trading in general, pretty much this year, it just has not been working. So I've just been adapting by scalping kind of off the lows, taking quick profits. And, today I left a lot of money in the table, which happens. I just need to get better at reading the market sentiment and reading each individual stock with whether or not it can make a big move. Because if it's going to make a big move, I need to be able to kind of pivot my strategy back to something that's taking that starter off of that support level or off the 90 EMA and then kind of adding into confirmations as it's riding up into that resistance level, looking for it to break. And then taking my profits into slowly kind of scaling out into an extension. but that's just not how I played the market today. I was still able to get green, but not as good as I was like to. So here, just kind of scalping off the lows, taking quick profits. Here again, we had this nice little ABCD pattern, kind of bull flag, riding the 9 EMA, but it did roll over. And it didn't start running again until the open. And I didn't catch this until kind of was running. I was waiting for that first red candle back to the 9 EMA, but we didn't get that up until all the way up here. So I got in here, took quick profits. I thought it still extended, so I didn't know if it had more room to go down. So I did kind of sit out on this 50-cent run. You know, if I was trading 1,500 shares, this is like a $12,000 position size. Very, very good with where I'm at right now. My average position size is probably between 3,000 and 5,000 right now. So to trade 3 or 4 times my average position size is really good, because it's showing me that, you know, I'm not scared to take big size when the opportunity is there. And that's really good to know, because previously I thought that, like, I was just too scared. I was too scared to size up. I was too scared to go for those big wins, risking, you know, having a big loser. But now that I can trust my strategy, I'm finding it easier to kind of size up. So I think that that first stage to sizing up, quick tip here, is just by getting consistent first, because then you can always remind yourself that you're falling back on your strategy. You're falling back on your statistics, that you're showing proven profitability and consistency. And if you can do that, then as long as you do the same thing and not get too much in your head here, then there's no reason not to size up when the opportunity is right. So when the opportunity is right, I'm definitely going to be sizing up to $8,000 to $10,000, $12,000 position sizes, because I totally think I'm ready for that level of trading. It's just that the market's not giving that kind of opportunity. So that's why I haven't really been pushing my share size. But I did here on this little pullback on USEA, and kind of up here to 1,000, 2,000 2,000 share position size, which is good. It's showing me that I'm not afraid of taking big size, which previously, you know, I thought I was. Just got to hold out. You know, I don't need to be proving myself that I can take big size right now, because right now it's not good time until we start seeing consistent momentum. And when it's consistent momentum and I can get a nice streak going, then it's time to do this. It's time to take $10,000 position sizes, because the opportunities are going to be more and more often, back to back to back. And, you know, even if I do take a 5% loss on $10,000, which would be 5% loss, what's that? $500. I can make that back in maybe 1 or 2 trades with that $10,000 position size. But, you know, in a market like this, if I took this trade here, lost 5%, $500, we might not have another stock like USEA for maybe 2 more weeks. So that could then, you know, give me a stretch of only making $100, $200, maybe $300 at best for the next 2 weeks, and that would just kind of put me way behind the ball. So that's why I think what I'm doing here is a good strategy here moving forward. But then we got this nice consolidation, holding the highs, very good action here, kind of having that ABCD pattern. So we have the A here, then the B down here, C making that higher low, curling up into the high, and it held that 540 level. Great entry there for a ride and up to 6, but I didn't have that conviction to hold again. Here I was just doing a bunch of scalps here off the lows. 1 cent there. This is a break even, or no, 2 cent win on 500. 1 cent win on 500. 4 cent win on 500. 3 cent win on 500. So all of these small wins just adding up. 1 cent win on 500. So all of those wins was adding up into something big. And I can show you my statistics. My biggest winner was $30. But my accuracy was 70%, my biggest win only being $31. So that just shows you that small gains really do add up. And if you're taking this sort of approach of scalping off the lows, it can be very profitable if you can have that high win rate. So here we had that curl up, but again, did not have that conviction to hold. Still holding 250 shares though, after I sold most of it for break even, adding back at 57, but selling it at 58, I left like 30 cents on the table there. Then we had this pullback, looking for a bigger pullback to the 90 EMA, but we didn't get it. So I felt like I was getting in high up here. But I always had to remember, if it's hard for me to get in on a good entry off the lows because it keeps getting bought up, that's usually a good sign that's going to move higher. Because if it's very competitive buying opportunities, like you really can't get in and get into, like it's not hanging around these lows, you can't get in the stock at a good price. It means that people are very eager to get in. It's probably going to push the price higher. But I didn't ride up, and I didn't ride up that 70 cent the next leg up. Man, like if you could have nailed this one front side, that could have made your month. This is crazy. This is a crazy move. You had two nice front sides. Here was a nice dollar front side, and here was a nice dollar front side. If you were trading with 1,000 shares, you could be up about over $1,000 today easily. Or if you're trading bigger size, I was trading up to 2,000 shares at one point. I could be up 4,000. Who knows? With that kind of share size. So, and then here we did have a nice pullback. That first pullback to the 90 EMA is always a really good trade. And I was in off the lows, however, taking my profits too quick. Again, I guess I had that fear of just like that next leg down, and that's really starting to affect whether or not I have big winners. Because I was in 1,500 shares, 1,000 shares. That could have been a $200, $300 winner if I just held just a little bit longer. And that's how close I was of having like even a bigger day. Then here again, here's a 4-cent win on 500. Here's a 6-cent loss on 500. Here's a 2-cent win on 1,000. So just kind of scalping off the lows. Anytime it dips down to like the 90 EMA or any sort of support level, I'm just looking at the tape here. Whenever I see buyers kind of chipping away the sellers when there's a big block of sellers, and I'm adding and taking a quick profit when the sellers come down, but then I see the bids start getting thicker and thicker and it's not budging, then I hit the ask, and then it pops up for a quick 5 cents, and I take my profits real quick. And that's what I've been doing today. And that's what I've been doing for 2 weeks, and I've been profitable. Maybe not the biggest green days, but it's holding me over. It's holding me through this winter of just no momentum. But occasionally we do get these good momentum stocks, but I'm not ready for them. Here, 4-cent win on 100. Here's a 1-cent win on 100. Here I start downsizing. It's 10:30. And I was up like maybe about 200 on the day. And I'm thinking about just conserving my profits. So again, couple scalps there. Then we curl back up now for the break of 7, which is now this is the third leg, right? This would be the third leg. And I take my starter at 81. Wow, and I'm surprised I was able to hold this for 4 minutes. But I was all the way in here at 81. All the way literally at the resistance level at 89, which I got in high, so I had no choice but to hold, or else I'd be taking a quick loss there. So I held, kind of trusting that it would curl back up, but I averaged down at 56, perfect entry, 56 right off the 90 EMA, but selling my profits a little bit too soon, again at 69 for a break even, and then we get that pop up. And I think it's because I got in here at 81, so I was down 30 cents, and then now my mindset's shifting to just trying to get out break even. And so that's that. And then here, small size, but completely misses, again, another 60 cents. So there's a lot of stuff that I need to work on to getting to that next level. But I will get there with enough time and enough repetition and enough times of just seeing this type of action. I'm going to be able to have that conviction and confidence to hold a decent share size through the majority of these run-ups, and I'll have a huge day. I know it's bound to happen eventually that it's just something's going to click on these front sides, and I'm going to be able to not be so a little bit fearful of getting caught in a flush, and to be able to actually hold for a front side. So that was USEA. TBLT. I think I had one trade on this up towards the highs, looking for that break of 325 pre-market high, but went pretty hard backside. I was able to get out for about break even before that huge flush. Thank God I was seconds away. And that's the kind of stuff that it's, of course, like that fear is sort of, that fear of getting caught in the flush is sort of real, because this does happen from time to time. You'll buy that first pullback right underneath the resistance level, increasing volume here, coming up towards the high. Buy that pullback at 314, and it immediately drops down when you can't even get a fill until all the way down at 304, and a quick 10 cents, 3% loss. And a couple of those can really put you way behind on the day. So, I mean, it's just about managing your risk, but you kind of have to go for those breakouts or for those big moves, because otherwise you're just not going to be able to have those huge green days in this type of market, or just in any market. So Nexi. So in a way, you kind of just have to trust your risk management process and know that that you can cut losses, because when the winners do come, then you're not going to be too scared to take those trades and actually hold them. Here was a 2-cent win there. It's kind of like a range trade. Then it popped up here. I was looking for that break of that pre-market high again, TBLT, same thing with Nexi. But this one didn't work out as well. I did get faked out up here at 3. No, I actually took that as a win. What did I lose here? I don't know, but I'm down $20, right? $21. Yeah, I was in here at 500 at 210, and then 500 at 208, but then I still was holding 1,000 from 213. So I took a 4% loss on 1,000 shares. So, and then I made some back down here at the lows. So small loss there on XE and GOEV. Traded this one. Here I thought we'd see that final move through 5. So I was kind of like anticipating a red to green, but didn't hold up. So I took that one off for a quick scratch or a small win there for about $7. EVTL, I thought this one would actually traded this front side 5 cents there, looking for that break up to 4 at 95. Actually got in kind of high, but that position off the 90 EMA would have been crazy good, 25 cents, but I did get in kind of late. Then here again, 3.99 panic dip buy for a quick 3-cent pop. And then we got that move. Power hour, I thought this would be good, and it kind of was, but here I did take profits real quick, but I was in a really good entry, 88. Should have held, but we did get that move through 5. So kind of just all around struggling with holding my winners. It's going to take me a little bit to kind of pivot out of that sort of strategy. But it just comes down to, in the moment, like recognizing a pattern in a stock that has that potential to make that huge run, and then sticking to my guns and holding and adding to a winner. We just haven't been seeing that, and that's why it kind of throws me off when you get these random days where you have like one stock that runs all of a sudden, and then all of the other days there's like no runners. Here's a 3-cent win, 5-cent win, 10-cent loss. I think I was net red, actually. I gave back $10 since I came back for Power Hour. So that didn't really work out for Power Hour today. But only gave back $10, which was good. I was able to kind of just kind of sweep it under the rug. Wasn't too terrible. BRQS, though, I did trade this pre-market. I had news, low float. I thought we'd get a move up past $2. Got in at 89, taking that off quick for break even, and then I got back in at 88, looking for that move, and it went backside, taking some off for a 7-cent loss, and they gave it some room to maybe for a quick red to green, but I had to cut it all the way down here at 77. Sold at 77, all the way at the low there. It really is what it is. I should have been more patient. I was a little bit jumpy because I thought it was really good news, so I thought it had a good chance of breaking out, but it just didn't work out like that. In hindsight, I should have been more patient to see more buying volume come in, and even if I was getting in at like 92, 93, a little bit high, that would have been justifiable, because I would see that confirmation on the tape and buyers actually stepping in. when I was getting in, there was no buyers. There was literally, yeah, it was low volume, under 100,000 shares per minute on this candle when I got in, and no buyers. So I needed to see like a huge green candle, and then it pushing up towards 193, 194. Even if I got in that high, that's cool, because then you have that next stop at $2, maybe add at $2, and then take your profits at 203, 204. And that would have been a really good trade. So I start off the morning with this $95 loss. So if I could just even erase that and not have even taken that, I could be over $300 today. But I feel like a lot of traders think like that, but there's nothing you can really do. I mean, hindsight, I took the trade. I thought it looked good. If it did work out, then I would be up almost $400. So I just have to kind of not let myself think like that, and kind of think about what if, because like you can go down, as a trader, you can go down an infinite rabbit hole of what if I did this, what if I had bigger size, what if I stopped out here, what if I added here, what if I held a little bit longer, what if I didn't hold a little bit longer. It's like you can never get it perfect. There's no way you're ever going to get it perfect in one trading day. It doesn't matter if you have a $1 million green day, your biggest day ever, you're still always going to think like that. It's like inevitable. It's like wired in the trader and every trader's brain. I don't think you can be successful if you don't even think like that, because that's how you get better. That's how you analyze your trades and analyze how you could do better. And, you know, getting good at anything requires that sort of analysis. You can never be really content with your performance. And I think that's just the price of trading. I think trading just requires that sort of like never being satisfied with your results, because otherwise you're not changing with the markets and adapting to the markets. And if the market is always changing, you have to be changing with it. You cannot be one step behind the market, or else you're going to get creamed every time. So, and with that changing, with that constant changing with the market, that comes a lot of pain, because when the market changes, you're going to learn quick by having losses and emotional pain of having those losses that, yeah, I need to change something here with this strategy. I need to do this a little bit different, And that's the cost of being a successful trader long term. But I think the reward is just so much greater, because, you know, maybe you go to work and you lose money. That's like an average person's brain. That's like idiotic. Like if you ask some random person on the street, like, I went to work today and I lost money, they'd be like, what the heck are you doing with your life? What are you even doing? Like, how do you go to work and lose money? They wouldn't even understand. But as a trader, it's like, you know, I lost money today, but that risk and like that emotional pain, maybe you're going through emotional pain, you lose a lot of money, is so much more worth it, because you're getting to an experience, a reality of like so much freedom that majority of people in this world, maybe like 99.999% of people, will never get to experience. You get an opportunity to experience that freedom of time. And if you're a really good trader, if you build up your skills over years and years and years, and be able to make a lot of money, like, I guess, like, you know, even like 100,000 a year, like 50,000 a year, 100,000 a year, 200,000 a year, 500,000, it's infinite. But like, if you can make a living wage, then like you can enjoy that financial freedom. And that is like worth, there's no amount of money that's worth that, because literally your life is, you only have is your time, and it's not renewable, and it's going to run out. And that's why people do this, and that's why it's worth it. It's why it's worth those emotional pain. It's worth having red days and going to work and losing money, and that's all worth it, because you get to enjoy the most precious resource that we have, which is our time. And most people go through their life and they spend a huge percentage of it doing things that they don't want to do, just so they can go on living doing things that they don't want to do. And that's just like every pledge to anybody who's been a successful trader or a profitable trader. It's like, that's their pledge to their life. Like, I will not ever live like that. And that's how that dedication and that commitment to that pledge has gotten them to being consistently profitable. So that's what I guess I want to have to say for this trading recap. Again, it's been another long recap, 25 minutes. I don't know who's still watching at this point, but if you're still watching, do hit that thumbs up button. Also consider subscribing. I do recap videos Monday through Friday. Also in the description, there will be a link for Trade Journal, which is a free analysis and journaling tool for all your trades, as well as an invite to the Discord link, which I'm in every trading day. Also in this future, I will be doing mentoring pretty soon. So keep an eye out for that. Also, yesterday I got in some comments on my recap video that there was no audio. So I did take that down, that video down, but it was a scratch day. I'll show you here if anyone is still watching and is curious why I didn't have a recap video for yesterday or why I took it down. So there was no audio on it, but here I'll show you the results for yesterday. Literally down 3 cents, so really not even worth redoing that trading recap. Traded GOEV front side, but it was just so grindy and like kind of hard to trade, so it didn't really work out. It just was very thick and just very hard to kind of scalp, so it wasn't really I wasn't really able to make any money on it. So there's my intraday P&L. But end of the day, yesterday minus 3 cents, so really insignificant in the grand scheme of things. Really could have just took the day off, but here I am. All right, finishing a nice green day at the end of the week. So super happy and super stoked for that, and then excited for next week. I hope next week we do get some good stuff. Definitely looking forward to it. All right, that's all. See you guys later. Enjoy your weekend. Do something fun. Also, you should probably take some time out of your weekend to review your trades and review the stocks that moved this week. We had some interesting movers earlier in the week, Monday, Tuesday, and then as well as today we had USEA, which is a good stock to review. So, yeah. All right, see you guys next week. Peace.